Hello everyone, welcome to the Ichimoku.co daily FX market review for the trading day ending Wednesday, September 2nd. Firstly to the Euro US dollar, and here we see selling in this market today as opposed to the strong buying from the previous day's trading. The previous day the buyers had control of the market. They showed very strong commitment by closing the market up above the Kijun-sen indicator, but today we've seen the sellers come back into the market almost in equal measure, not quite, but fairly strongly. A good build of downside momentum here, and suggesting that we certainly could see the Euro US dollar trading down to about the 1160 level of support. The sellers have closed with strong control of this market, closing down around the low, and we are seeing this new candle for this next trading session trading down below the low of the session that's just closed, so a good possibility of a trade down to about 1160. Down below there we do have the Ichimoku cloud, so we have very strong support extending all the way down through to about the 110 level. Moving to the hourly charts with the Euro US dollar, and here we saw the market open above each of the Ichimoku indicators, only selling off throughout the majority of the trading day, forming a series of lower peaks and lower troughs and trending down quite strongly. At times the Ichimoku indicators were holding a strong resistance, as did the middle pivot point level, and then the market tested around the bottom of the Ichimoku cloud and around that first pivot point support level, failing to breach down through there in a bearish manner until the final hours of trading today. We opened the new session down below each of the Ichimoku indicators, the Tenkan-sen holding as resistance, and we should be watching that area 112.27 at the moment as a continued area of resistance. Any breach through the upside there could see the market trading to the bottom of the Ichimoku cloud at 112.50, but we are likely to find strong resistance around there. Any continued selling will be looking to the first pivot point support level 111.87 to hold a support, and the breach down through there could easily see the second pivot point support level at 111.48 tested. Next to the US dollar Japanese yen, and strong buying in the market today. The second last candle on the chart is the one that has completed trading, coming off the 119.20 level of previous support, and a good answer from the buyers here today. Haven't traded through the top of the previous day's candle, so certainly the buying hasn't been as strong as the selling from the previous day's trading, but the answer here has been quite decent, trading up through the midpoint level of the previous candle. Buyers in control, a good solid build of momentum, and we are seeing the buyers continue with that momentum in the new session. Looking to some strong resistance, however, around the Kijun-sen indicator at 120.87, and any breach through there is likely to find resistance at the 121.14 area. Any selling could find support at the 119.85 level, and then down around the 119.24 level where the Tenkan-sen trades, and just below there that 119.20 level of support could come into play if we do see any selling in the near future. To the hourly charts, and the market rallied throughout the majority of the day, pretty much the opposite of the Euro US dollar. A series of higher peaks and higher troughs, breaching through the Ichimoku cloud for the beginning of the new session, and the bullish breakout suggests that we certainly could see this market continue to trade higher. Looking at the top of the Ichimoku cloud to hold a support if we do see any selling, and at the moment that trades at 120.44. A very good opportunity for the market to test the first pivot point resistance level. It's very close by, 120.79, and I suggest that if we can breach through there, we should be able to reach the second pivot point resistance level, 121.25, if we can build some momentum up through that first level. Next to cable, the British pound US dollar, and here we've seen formation of a very weak indecisive doji type candle, and that followed the very strong bearish breakout down below the 153.28 level. There was an opportunity here for the sellers on this breakout. The sellers had strong control of the market, and they've lost that control for today's trading by closing around the midpoint level. This is an indecisive candle, so the opportunity is here for the buyers, but the buyers may face very strong resistance at the 153.28 level previous previous support can easily turn into resistance. So that's going to be the benchmark for the buyers for the next day's trading. The sellers, if they're strong enough, they will need to breach down through the low of this doji candle, 153.25. A lot of doubt in this market. That's why it's a doji candle. It's a candle of indecision. It means that the net momentum is virtually non-existent, and that's as evidenced by the very small body of the candle, or virtually no body, by opening and closing around the same level, but also the shadow on the top and the shadow on the bottom represent the both the buyers losing commitment and the sellers losing commitment. So the opportunities here for whatever side wants to take control of this market, but we can't preempt the market. We have to watch how the market reacts around 153.28 if we do trade there, or how we react around the low if we can trade down through there, the low at 152.63. Now, just looking at the bands here with the with cable, and here we see continued trading activity down below the lower band. The previous bearish activity established a very strong bearish bias in the medium-term time frame, and if we do see any rally here, we're likely to find strong resistance at the bottom of the bands at 153.90. To the hourly charts with cable, and here throughout the session that has completed trading, we saw the market open below each of the Ichimoku indicators, unable to rally in a significant way through the Tenkan-sen, finding very strong support at the first pivot point support level, attempting to rally, but really not even reaching the middle pivot point level. For the new session, we've opened around the confluence of support at the middle pivot point level, 152.96, and the Kijun-sen and the Tenkan-sen all trading within that area. If the market does attempt to rally off here, we have very strong resistance at the first pivot point support level with the Ichimoku cloud close by, 153.28. So some very strong resistance for this market. So we may not see the rally here through the Ichimoku cloud and the market trade higher. We actually could easily see the market sell off if we can breach down through the Kijun-sen support, 152.94, and test the first pivot point support level at 152.66. Next to the Aussie dollar, US dollar, and here we see continuation of the trend to the downside for this current candle that has finished trading, forming a lower high and a lower low, and that was off the back of this very bearish black-bodied candle that was trading down through that important support at 70.72. We've traded down through there in a bearish manner. The market found support at the 70.13 level, and for today's trading we tested down through the important 70-cent round number, and we've been rejected from there. The buyers taking control on that candle, the sellers losing commitment down below the 70-cent level and this 70.13 support. There is an opportunity here for the buyers, but we are likely to see some strong resistance coming in now at this 70.72 level, previous strong support level. If the market does rally through there, very strong resistance at the Tenkan-sen. But looking overall, the market is trading down below the Ichimoku cloud, below the Kijun-sen and the Tenkan-sen, and the bearish activity is supported by the Chica span. So we do have a very bearish environment for the Aussie dollar, and any rally that we see here is likely to be short-lived. The test here in the short term is going to be resistance at 70.72, but in the longer run, over the next few days, if we do see any selling coming in, the real test is going to be the 70-cent level. Looking at the bands here with the Aussie dollar, and this bearish activity continues down below the lower bands. The bands are starting to widen, suggesting that we have volatility manifesting itself as trending activity to the downside. Off the back of this moderately bullish candle, if we do see the market attempt to rally, we are likely to find very strong resistance at the bottom band at 71.10 if the buyers are strong enough to trade up through there. I suggest that they're not likely to breach up through there. We're likely to see the market test to there if they do, and then sell off. Next to the hourly charts with the Aussie dollar, and here we saw the market opening down below each of the Ichimoku indicators, failing to reach the first pivot point support level, which was a fair way away. The market then rallying towards the end of the day, only to find strong resistance at the bottom of the Ichimoku cloud at the start of the new session. We are testing around the cloud, very strong resistance extending through to about the 70.71 level. If we do see selling coming into the market, very solid support through the Tenkan-sen, the middle pivot point level, and the Kijun-sen extending down through to about at 70.20, but a solid bearish breach down through there could easily see the first pivot point support level tested, 69.94, just below that round number 70 cents, and strong bearish activity down through there could see the market trade down to the second level at 69.53.